Hey, it's Rob. Welcome to Everyday Investor, the hottest investment show in the world. That's right, I said it. I don't care who knows it. We all want more time to spend with family and friends. We want time to engage in a purpose greater than ourselves, have some sort of meaning in life. The challenge is we spend most of our time working to make money in order to live. Let me say that again. We spend our precious time working to make money in order to live. Imagine a life where money could make you money to live in order that we could work less and have more time for the things that matter most. Well, you can. Learn how from everyday people who are making this a reality. Don't go anywhere. We'll be right back. Coming up, Cato Pastoll teaches us how our money can make us money investing in businesses.
What we allow you to do is kind of get access to businesses across Canada. So, businesses in lots of different industries and in lots of different geographies, and lend your money to the businesses that you like. So, you can lend as little as $25 because, the online platform allows you to lend that little of an amount.
Everyday Investor is brought to you by ProFunds Mortgages, fixed returns, real security. Clover Properties Rent to Own, invest with a purpose. Sam McDaddy Real Estate, full-service brokerage for all your buying, selling, and investing needs.
Hey, it's Rob. Welcome back. Remember, whenever you're faced with any type of investment opportunity, you always want to ask the 4 questions to start. Number 1, what is the return on investment? Number 2, when do I get that return along with the money that I put in? 3, what is the minimum investment amount needed? And 4, what is the risk, the worst case scenario? Super excited about today's show. We're going to be talking about how we can make money investing in businesses. I have my good friend Cato here on the show. Cato, thank you so much for being here.
Thanks for having me.
Your last name, Pastoll. Is that how I say it? Pastoll.
That's right.
Yes, and where does that come from? I mean, we've talked on the phone. This was a very interesting concept. Someone said, you've got to meet Cato. He's doing something really interesting. He's, the co-founder of something called Lending Loop. And when I talked to you, I was, I love the accent, a little bit of a mix here. Where does that name come from?
Yeah, so I actually grew up in England, and my parents are both from South Africa, and they're both small business owners. So really the genesis of Lending Loop was really growing up in their businesses, seeing their businesses be successful, seeing them work really hard every day to run their small businesses, and wanting to create something for small business owners to succeed.
So you, in diapers, were an entrepreneur, so kind of, when did you kind of start your first kind of business? Is this your first, or did you, do the lemonade stand when you were young? Did you have a lawn cutting business? Kind of tell me a little bit where this all happened and how you kind of grew up with 2, parents that were business owners.
Yeah, it definitely started in diapers for a story or a genesis of how we, came to where we came to. When I was a kid, I used to run the car wash. I ran a candy shop. I used to work in my parents' businesses on nights and weekends. So I've always had that kind of entrepreneurial spirit or kick inside of me. And as I grew older and started to kind of see more of the world, I realized that this was really something that would connect deeply with myself and what I wanted to help, and also my kind of upbringing too. Yeah,
and but what's really cool is that your parents were doing it, because there's a lot of people that a lot of parents, and it's not it's just really kind of out of fear or maybe a lack of knowledge, but it's dangerous to be an entrepreneur. It's dangerous to start a business. Go get your degree, become a doctor, lawyer, all that kind of stuff. So I think there was a big a great blessing there that you kind of grew up into this this environment. What do you think about this lack of encouragement to be an entrepreneur in today's society, lack of financial education? What are your thoughts in and around that?
Yeah, it's such a great opportunity to be able to do your own thing and run your own business. It definitely takes a lot of courage and perseverance, I would say, to go through the barriers that somebody faces doing that. But I encourage anybody that I ever speak to or give advice to try to do something by yourself, no matter how small or big that is. It's a fantastic experience, and the learning that you get from it personally, just can't be valued enough.
And the whole premise of the show is really to be able to do things that are going to give us, enjoyment, to be able to have, peace and contentment, and, and that could be having your own business, called Lending Loop. I love the name. Tell me a little bit about the the impetus of that name, Lending Loop? What does it mean?
Yeah, so what we do is we allow people to lend to businesses, and it's a circle kind of giving back. So as an investor, you lend money to that business, and then that money comes back to you, and hopefully you lend money to another business. So kind of the reason we chose the word loop is, one, it sounds nice, Lending Loop, and secondly, it really represents what we're really doing, which is kind of creating a community between both individual everyday Canadians and small businesses that are looking for capital.
I mean, I've never heard of this, before. I mean, obviously, as a investor privately to one business, somebody needs some capital, and maybe I'll get a return on my investment. Maybe I'll get some equity in that deal, or whatever the case may be. But this is a little bit different. We're not investing in just one business. If Rav has $100,000 to invest, this goes over multiple businesses.
Exactly, and that's really been made possible by the internet. What we are kind of enable people to do is lend that money to many different businesses. So as you said, if you invested some money traditionally, 20, 30 years ago, you'd probably go to one business who maybe you had a friend running that business or a relationship with, and you would lend money there. What we allow you to do is kind of get access to businesses across Canada. So businesses in lots of different industries and in lots of different geographies, and lend your money to the businesses that you like. So you can lend as little as $25 because the online platform allows you to lend that little of an amount.
$25.
$25.
I can lend
right.
that. Okay.
Yeah.
And is there any kind of accreditation, any kind of qualifications for this?
We do make sure that it's the right investment for you. So when you sign up, we want to make sure that you fully understand what you're getting into and the risks involved. But it is open to anyone in Canada. So any Canadian who wants to do this can.
And that's what we're focused on, is people in Canada and businesses in Canada?
Yeah.
Okay.
Canadian investors in Canadian businesses.
Canadian investors, and this is, because we want to do that, there's kind of a holistic view on that, or that just makes business sense right now? Like, are we going into the States? Are we going into different countries? Well, what are we doing with that?
Right now, the focus is on Canada. It's a massive market. We estimate that there's about $40 billion of small business lending that occurs every year here. So that's a massive number, and it's something that we want people philosophically to get involved with. I really personally love the idea of being able to lend my money to a small business. I really understand it. It's very tangible to me. And so we really wanted to make that available to anybody who wanted to get involved in this type of thing.
And Cato, these aren't like startups. I mean, these are vetted businesses. Roughly, what do you look at in order for Rav to put his $25 into, or $250,000 into? Well, actually, let me ask you that question. What is kind of the typical average investment? Do we have those stats, or?
Yeah, the average investment is around $8,000, $9,000. So it's
really?
relatively small. But what people can't, we have quite a diverse group of investors. So we have people putting $25 in, and we have people putting hundreds of thousands or millions of dollars in. So really, what we wanted to do was make this accessible to anybody. In terms of the types of businesses, there's a wide variety of businesses that use Lending Loop. So coffee shops, yoga studios, restaurants, manufacturers. Really, anybody can use Lending Loop from a business perspective.
Yeah.
And as an investor, you can either invest in all of those businesses or choose the ones that you're most aligned with.
So again, Rav puts in $10,000. How many different businesses is that $10,000 going to on average?
Yeah, I would say at least 100.
100?
Yeah, and that's really important because from a diversification perspective, you want to make sure that you're lending to as many businesses as possible to decrease your risk. So, we would always say it's not a good idea if you're investing $10,000 to put that in one business. Rather spread that across many different businesses, and that really minimizes your risk. So if anything happens with one of those businesses that you lent to, you've still got all the other ones that are performing well.
So businesses come to Lending Loop, and again, how do we vet them, and for how long do they have needed to be in business?
Yeah, so the minimum is 1 year in business, but on average, it's actually closer to 9 years.
9 years?
Yeah, so the average business that gets a loan through Lending Loop has been around for about 9 years. And they have to have been generating at least $100,000 in revenue, have to have been around for a year, like I said. And then we also have an adjudication process that looks at things like credit scores and the assets that the business has in order to determine that they are creditworthy. Yeah,
so that's amazing, because we always want to talk about risk and worst case scenarios. But if I'm putting $10,000 over 100 different businesses, they've been around on average for 10 years, and we vetted them in terms of their credit and so on and so forth. What is the risk?
Yeah, I mean, with any business, there's always the risk of business failure, right? We see restaurants go out of business or retail shops go out of business. So that is a risk involved with lending, which is why that diversification aspect is so important. Because while you're making money from each of these businesses, what's important is that if any of them fail, that is a risk of investing. So by diversifying and kind of building a pool of businesses, overall your returns should be positive, even if 1 or 2 or 3 or 4 of your investments fail within that overall pool of businesses.
And so why, all sorts of reasons, but give some examples. Why does somebody need Rav's $10,000?
Yeah, there's so many different reasons. A lot of it is expansion or growth capital. So a lot of businesses that are looking to expand, open a new location, renovate their store, build a patio for the summer. We see, so many different reasons from so many different types of businesses. Sometimes it's refinancing. So sometimes maybe they have a higher interest debt and they're looking to refinance that and get that free. So we've got, hundreds of different stories from businesses, and they're all really great stories to hear and learn about. And some of them are even on our website because we really like to showcase the success of the businesses that we work with.
Fantastic stuff. Cato, I not only love your accent, I love your brain. We're going to take a quick break, and we are going to come back and learn more about how we can make money investing in businesses. Don't go anywhere. Everyday Investor continues in a moment.
Everyday Investor is brought to you by ProFunds Mortgages, fixed returns, real security. Clover Properties Rent to Own, invest with a purpose. Sam McDaddy Real Estate, full service brokerage for all your buying, selling, and investing needs.
Hey, it's Rav. Welcome back. Today we're learning how to make money investing in businesses. Cato, thank you so much for being on the show. This is a little different for me. We've been doing kind of a niching out everyday investor for many years, and predominantly, probably even 100% on real estate investing. And when I heard about this concept, when I heard about Lending Loop, I was fascinated. So thank you for coming on the show and kind of teaching us how you can make money. It's really what you taught me over the phone, and when we talked before for an hour or so. This is a diversification play. Talk a little bit about that.
Yeah, absolutely. So as an investor, I might have my money in real estate, I might have it in equities, but this is a nice new asset class for me to be able to diversify my portfolio in. So not only is the actual investment itself diversified, but it's a nice way for me to kind of get exposure to something different. So if my real estate portfolio is doing one thing and my stock portfolio is doing another thing, this is a completely different asset class that shouldn't be in any way correlated to those two portfolios.
And so this is a cash flow, right? We're investing, and I'm going to be getting a return on investment. So let's talk about what are we kind of aiming for, what has been the last few years, what's been the return on our investment?
Yeah, so if we look internationally at platforms like ours, they'll typically range anywhere from 6 to 10%. And it's no real different here. Like, we kind of see returns somewhere between the 7 and 9% range. So
7 and 9%.
Yeah, that's typically what you'll see as an investor.
So Rav is investing $100,000. It's going to go across a few hundred different businesses, and I can enjoy anywhere from $7,000 to $9,000 of cash flow. And this is paid monthly, quarterly, yearly. I choose. How does it work?
It's paid monthly, and what's really unique about this as well is that you actually get some of your principal back, like a mortgage. So every month you're getting a payment of interest, but also some of your principal back, which kind of de-risks the overall investment. And if you want, you can reinvest that and on compound interest, or if you choose not to reinvest it, you can take that money out and do what you please with it.
Wait a minute, I don't want the viewers or listeners to miss that. So you said that I invest $100,000. There's a term to this?
Yeah, so on average, it's just over 3 years.
Okay, so there's a 3 years, because that's the exit.
Yeah.
So in 3 years, generally speaking, I would have been making 9% cash flow. I would have been making $8,000, $9,000 a year, and then at the very end, I would get back my $100,000.
Right.
You're saying this is like a mortgage. So I'm making my interest of 8, 9%, plus I'm getting a principal back, a component of my principal back as well. So by the end of the 3 years, I would have gotten back my $100,000 plus $8,000, $9,000 per year.
Exactly, that's right.
I would get back my $100,000 plus $27,000 to $30,000, and it's all done. That's
right.
very interesting. And then the wonderful word of compounding.
Right.
So when I get that money, you're saying that monthly, when I get it, if I don't want principal and interest, if I don't want that, if I don't need that, I can reinvest it.
Exactly. Yeah.
So it's not 8,
yeah.
9%. Then it becomes more.
Right.
Right. You're just saying simple 8, 9% if I wanted to take it and keep it. But if I compound it, I mean, then it's upwards, upwards, and upwards.
That's one of the great parts about lending, right? It is compound interest. But again, you have that flexibility as an investor. So while you can reinvest it, if you choose not to, you don't have to. But if you want to continue to earn money on your money, the nice thing is that every month you're getting a piece back. So like you said, you don't have to wait 3 years until the very end or 5 years until the very end. You actually get a portion of that back every month.
So the return on my investment of $100,000, 6, 7, 8, 9%. I get it back because at the end of the term, I know ahead of time when I lend the money. It's a 2-year term, 3-year term, whatever it is. I'll know that in advance. Minimum amounts is a whole astronomical $25 is the minimum amount, and then the risk is. We're diversified. I'm in several different business, over 100, 200, I guess, different businesses. I choose how many I want to be across. If I wanted to, not that you would recommend it, I can lend to one business.
You could. Again, we would say that's not an appropriate strategy for most people. But that being said, you could have the ability to do that. But most of our investors, if not all, are kind of spreading their money across a portfolio of different loans, and you can pick the amount per loan. So, going back to your question about $10,000 before, you can invest $100 in 100 different businesses, or you could invest $50 in 200 businesses, or you could invest $200 in 50 businesses. So you can set that up yourself.
Lending Loop doing it for me. I say, okay, here it is. Put it across 100 different businesses, or am I choosing the 100 different businesses that are out there?
Again, you have the choice of doing that, which is one of the great things about what we do. So you can either pick and choose specific ones, or you can go and actually just kind of allow us to diversify your portfolio for you. But we're only doing that according to the criteria that you set. So you would tell us kind of your risk profile and tolerance. You would choose the types of loans that you want to invest in, and then we would allocate that capital for you.
So what is the process? I mean, is this mostly an app play? Is it an online? Am I having to get in the car and head over to head office and fill out some paperwork? Kind of talk through the process.
Yeah, it's entirely online and digital. So you can actually open
entirely?
an account entirely online and
Cato.
digital. Yeah.
Entirely?
Fully. So within 5 minutes, actually, you can open a Lending Loop account. So you just go to our website, lendingloop.ca, you'll click the button to sign up, and you can have an online digital account. And you can, right from there, go and control your investments, have full visibility into your portfolio, and choose what you want to invest in.
And so we've been doing this for how long?
Lending Loop's been around for about 4 years now.
4 years, and this is Canadian businesses, Canadian investors. You did mention, this is happening abroad. Is it the same kind of thing? Is there other people that are doing it in Canada like this?
Right now, we're actually the only platform in Canada.
Is that
however,
right?
Yeah, so we're actually the first company in Canada to actually get an approval to operate this type of business model. There are businesses in other geographies, so in the US, the UK, Australia, New Zealand, who have operated this business for probably about 10 years now.
So you say approval from who?
Yeah, so we're regulated. So we're a regulated exempt market dealer with the Securities Commissions, which is kind of how we're allowed to operate this business.
Can you give me some kind of examples, some case studies, of what we've been doing?
Yeah, so there's a couple businesses that come to mind. The first is a brewery, a really popular brewery out on the Lake of Bays. And what they did is they borrowed $100,000 from us to expand their production capability. So it was coming up to the summertime. They needed to brew some more beer, and they were able to get that loan in order to expand their production and get ready for the summertime. So really helped them to boost their sales. Another example that I think of is a restaurant here in downtown Toronto. They'd actually been financing their business through credit cards, which is something that a lot of business owners do. And what they wanted to do is get out of credit card debt. They wanted to become debt-free. And one of the amazing things is they were able to borrow about $40,000 from us, pay off their credit cards, and within about 18 months, they were completely debt-free.
And I mean, those credit cards were what? 20%, 25, 30%.
Yeah.
Here they're paying out 6, 7, 8, 9%.
Exactly.
And so it's a win-win for them, and it's a win for the investor. But a lot of people, it's a big question, and it is like even in the real estate world, when somebody wants to renovate, Why would somebody pay even 8, 9, 10%? Why wouldn't they get a home equity line of credit on their house, or why wouldn't they? Because they'd be paying a lot less. What would you say to somebody that asked that question?
Yeah, I mean, a lot of businesses, have an opportunity to do something. So if they know that they can buy $100,000 worth of stuff and make $300,000 off that, it doesn't matter if they're paying 10% or even 15 or 20%. If they know they're going to make way more money by doing that. So all of these are really about opportunity. A lot of business owners or entrepreneurs see opportunities every day, and when they're ready to seize an opportunity, they sometimes need the capital to take advantage of it. So for, I'd say, most businesses, interest isn't kind of the number one issue at hand. It's really about what's the opportunity that they're going after.
And do you find that investors do this purely for the cash flow, the compounding interest, or is there a kind of our money's not necessarily under the category of benevolence, but is there from the investor, hey, I want to help out the community, I want to help out small businesses in Canada?
Yeah, we definitely get a lot of feedback from investors who are investing because they want to give back. So we even have kind of some former small business owners or entrepreneurs who want to invest in other people who were in their position 10 or 20 years ago. Even for myself, when I started investing in this, the main thing that I loved about it was the transparency. When I invest in a lot of different things, sometimes I didn't really understand where my money's going exactly or how it's being used. With this type of investment, investing in small businesses, I know exactly who my money's going to, how it's being used, and I think a lot of people like that transparency, and they also like that they feel the impact of how their money is being used.
Cato, I think this is fantastic. Time flies when we're having fun. I love the fact that there's a term. I love that it's a diversification play. I love that it's over many businesses. I really love the fact that I'm getting my return on investment along with the principal, and then I have the choice whether to put that somewhere else, whether to reinvest, and so now it's compounding. Thank you so much for being on the show. I really appreciate it.
Yeah, thanks for having me.
And thank you for tuning in. Without you, we wouldn't have a show. For more information on this show or any others, or to become an everyday investor insider where you can get investment opportunities, tips, advice, go to everydayinvestor.com and sign up. Until next week, we'll see you same place, same time. Honey, I love you. I'll be home soon.